Good morning, good afternoon, good evening, based on where you are. Welcome back to yet another episode of the weekly equity market update with Irfan Khan and Joseph Di Virgilio.
And what investors must know this week. Hi, I'm Joseph DiVirgilio, hedge fund manager, 25 years on Wall Street, running long short equity hedge funds. And Irfan Khan is my partner in crime.
Partner time. There's lots to know
Legend,
about what
legendary,
happened.
legendary Irfan Khan, my man, my man.
Oh well, it's a real pleasure as always, Joseph, to be on this stimulating talk with you,
Conversation. Yeah,
conversation,
sure.
hearing about what you have to share and commenting it with you. It's been a pretty eventful week, and I guess we'll be talking about.
It's been all over the place. We'll get to all that. Market recap of last week's market performance, economic data, and a lot more. What's going on in the Middle East and whatnot. But before we get to all that, there's our usual thing. We
The
start with
statistic
the
of the week.
statistic of the week. Go ahead.
This is mind-boggling, my goodness. So here's the S&P 500 paradox. So listen up, folks. Between 1984 and 2002, so that's over range of what, 18 years, the S&P 500 averaged more than 12%, 12.2% to be precise,
Exactly.
average annual return. 12.2 is phenomenal. Mutual funds averaged 9.3%. I could sign up to that as well. But the average individual investor only achieved a 2.6% return. And this highlights the destructive nature of market timing.
Absolutely. Nobody ever knows when the bottom is set or when the top has achieved.
So,
Is
so
it
you're telling me basically that those who only achieved a 2.6% return, 2.6%, yeah, they were somehow trying to be smarter than everybody else and say, oh, I'm going to time the market, so I'm going to enter and then exit at the right time, that sort of thing,
correct?
right?
Correctly. That's
My God.
that's correct because the worst thing you can do when you invest in a stock market is try to time it. So the one thing you want to do first of all is be diversified, and the second thing is
This
only.
cannot be overstated. We just keep saying it more or less every time, but it's just one of those truths that just
But
cannot.
no, but you see, every statistic of the week that we give points to one thing: diversify long term. Full stop. Right.
That's
So
it. As simple as that.
as simple as that. And if you try timing the market, you're wasting your time. You get into the market when you think the price is right of a stock, an index, or whatever ETF or whatever it is, and then you dollar cost average over time. When there's an economic disaster or a really heavy correction, that's when you
That's the
add.
time to enter the market and double down on it.
No, 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 not double down, but gradually, I know you're more aggressive, but doubling, but gradually adding to the position, and over time,
Okay.
you'll always
Yeah.
win. So so if you, that's why I always say if you have X amount of money that you want to dedicate to an investment, just put half of that money in first, because you never know if this investment will retrace, and if it doesn't, you're still participating. You only bought a half, and you should be thankful that you didn't make a mistake and it went down. But if it does go down, you still have money, half of the money left that for you to add to it. And you usually take that other half and divide it into, and the dollar cost average if it goes down more. So it goes down, 5, 10%, 25% of the 50% remaining cash, you use it. And then if it goes back up, you're good. If it keeps going down, then again, you average dollar cost average again. So
I, I,
discipline,
I think here,
discipline.
I think here there's a very big important distinction that we have to make because you see, we every time we take the opportunity to remind our viewers and listeners that this is not financial advice, and obviously people
Right.
should go and consult with their own financial advisor because we could not possibly know about everybody's personal situation. At the same time, there's a distinction to be made that what we're saying now, for instance, this distinction, this piece of information that we're sharing now, is more of a sharing of principles and rationale and mentality,
Rules.
rules, overall rules, So those are the kind of guiding principles that we think add value to people who are
And
listening to
then
us who are interested in investing in
one
the
of the very
market.
important thing is also, we're trying to teach you listeners, viewers, to take the emotions component out of investing because
That really makes such a humongous difference, doesn't it?
it does. You just, you invest, shut off your computer, you look at it once every 2 weeks or 3 weeks or a month, even less. You start looking at the market and volatility, and you'll end up having a heart attack before your time. So it doesn't pay to be there. That's why be diversified, because you can sleep at night, and if things happen, you can just add to it. That's it, and you sleep, and you don't have to be. Day traders, they're idiots. They think that they're going to make money in a short term. Good luck. Like the statistic of last week, 90%. Well, no, was it 2 weeks ago? 90% of traders lose 90% of their cash in the 90% days first 90 days of them trading. So it's like mind-boggling. Anyways, let's get to the market recap a second, because some interesting things. Last week, the week before, we talked about how the market collapsed on Friday prior. But now markets have extended their rally this past week, driven by strong AI tech-related earnings, like NVIDIA, for example, and some of the easing of the geopolitical tensions going on with Iran. And the Dow Jones Industrial Average hit new record highs, which it was suffering the week prior, but it's coming back. So those are the mega caps, of course. Now, the one thing I was going to say is that NVIDIA actually had really, really good earnings, and that is, and they give very strong forward guidance. That's going to propel these tech stocks higher, but there's a degree of volatility out there. We still don't know if there's a resolve with Iran. In fact, I was reading reports just the night before yesterday that the airspace over Iran was clear completely. And that Trump had to rush from some event, I forgot where he was, back to the White House. And that, to me, there was a bit of speculation, and I was convinced of that. That seemed like new bombings were going to take place on Iran from part of the United States. But then last night, Trump tweeted something to the effect of, we're making really big progress, a deal is imminent, or something to that effect. We're extending our ceasefire 2 more months. I don't know what ceasefire he's talking about, because he's just, and nevertheless, if nothing happens, if there's no something crazy going on today, Sunday, the 23rd, is today Thursday, right? And
24th of May.
The 24th, right? Yeah. So if nothing happens today, we can expect markets to do quite well tomorrow. But because the prospect for the Strait of Hormuz being open is what everybody's looking for. So the tech and AI earnings. Okay, so what the $80 billion stock buyback? This is NVIDIA, what they announced. So they're buying $80 billion of their stock. So expect the stock to be very resilient on the downside. So
let's remind our audience, in what situations would a company decide to buy back its stock, and for what purpose?
All right, so there are multiple reasons why a board would decide, would approve a stock buyback. One is because they believe the stock is cheap.
Mm-hmm.
The other one would be because they're trying to take shares off the float to inflate the dollar per share amount on earnings.
Okay.
Right. But there are so many other reasons. And in my view, this has to do with the fact that because when a company buys its own stock, it's usually a really good sign, right? Mm-hmm. So they believe in the numbers, they believe in their outlook, and the forward guidance that they gave, they're buying the stock. And then that's $80 billion. I mean, now again, stock has a $5 trillion market cap or something to that effect. So it's not a lot of money, but it's $80 billion. It's still support for the stock. So it's safe to say that the stock, if the buyback is going to give support to the stock. Also, Dell, HPQ, saw their shares surge. Very, very interesting. Also because of their earnings, and there's also been the IPO, the SpaceX IPO that's been announced. And what else? That's it. The S&P 500 was up 30.37 for the week. The Dow Jones 0.58 and Nasdaq 0.19. The Russell 2000 was up 0.91%. That's the volatility.
They're all moderately positive.
Yeah, and the COB, the VIX, the volatility index was closed at 16.70, which is quite 16, 17. Even you can start thinking of the market, having taken off some of that anxiety. So that's a good thing. Now, there's two stocks I want to talk about later. Remind me of the other one because I didn't put it on the notes. But so the week featured mixed signals on inflation, an increasingly hawkish tone from the Federal Reserve, from the minutes of the FOMC, Federal Open Market Committee, and rising Treasury yields as geopolitical developments remained on focus. Now, the one thing that spooked the market was the other day when Kevin Warsh was sworn in, and he said that the likelihood is that rates are going to go up instead of coming down because of what's going on in the Middle East, which is, I don't know why he would say that, which is what he should say. But he was chosen by Trump specifically to cut rates. And it goes against what every economist will tell you. Trump, unfortunately, is quite an ignorant when it comes to economics. So unless Scott Bessent somehow convinced Trump that, listen, let Warsh do whatever the heck he has to do and don't interfere. But I can't possibly see Kevin Warsh not keeping in mind what the president wants. And even if he is independent as he's supposed to be,
yeah,
he's going to have to accept the fact that he'll become the next punching bag for Trump, just like Jerome Powell was. As housing market continued upward pressure on yields, drag mortgage rates higher, and geopolitical things we just talked about. So we talked about the discussion. Okay, when we're going to talk about the Strait of Hormuz now, since we touched upon it a little bit earlier. There's still everything is closed. Some ships have gone by. I think 2 Japanese ships were able to leave. Mm-hmm. There's been some movement. So the U.S. blockade is there, but not really there, because they also need to understand that something's got to give. And so I'm hoping that there's a resolution, but everybody needs to understand one thing in particular. Even if the Strait of Hormuz reopens, it will take months for capacity to go back to where it was, if not years. Infrastructure destruction, and the mines need to be cleared out. I don't know if they said that they cleared all of them out, but they didn't. There's just so much.
Repairing and
insurance companies. I don't know how comfortable they're going to feel to start reinsuring ships that take the route. The Persian Gulf route. There's so much going on that it's not going to just go back. Oil is not going to come from 105 when it closed 105, 110. It's not going to go back to 60 overnight. It's going to. We're looking at a really harsh.
At least a year before we really start seeing any significant difference.
Yeah, well, look, it's going to be a harsh summer for those who, let's say, the lower tier of the income bracket, the income level. Gasoline is going to be expensive for the summer. Nothing is going to bring oil down below 85, 90.
If you're in the northern hemisphere, then you're going to be dealing with summer now the next few days.
Correct. Yeah, well, that's where a majority of the world's population lives, anyway. So, discussion on Nokia. That's the stock I wanted to talk about. We talked about Nokia a couple months ago, I think it was, and I've actually increased my position on Nokia. I love what's going on. It's incredibly overvalued, but they're executing so well that it's hard to ignore, what they're doing and how they're going about it, and how they're revamping with NVIDIA's investment into the company. They're gearing up on AI. And this resurgence of the old communication stars. Did you see this BlackBerry stock like the other day? Up
No, I didn't.
20%.
How much?
20%. It was skyrocketing.
What's
And
going on with BlackBerry?
it's the same story as Nokia. Same story. They're becoming now an AI type of software platform for communications. It's like they're reinventing themselves, and somehow stock was up so much the other day. I was like, BlackBerry. I mean, who talks about BlackBerry anymore? And it's time to take a look at them again and see what the heck's going on with the company. But nevertheless, I'd rather stay with a safer play, which is Nokia for now, until I dig into BlackBerry to understand more what's going on. But
Mhm.
it could have just been a knee-jerk reaction, moving along with.
Time will tell.
Yeah, we'll see, because Nokia was up 10 or 8 or 9%, and BlackBerry just boom, around the same theme. So let's see what happens. Hey, by the way, guys, don't ever act on what we tell you. This is mine and your fund's portfolio. We don't.
If you want, just explore it, but with your own financial advisor and say, hey, would this be something sensible for me? But don't
Perfect.
act upon it just because you heard it here.
Correct. We're
Think
not
about
giving financial advice. We're discussing what we like. We invite you to take a look at it, but we're not inviting you to buy it unless you talk with your financial advisor first, for sure. And if you wouldn't mind liking the channel,
subscribing,
subscribing to the channel,
commenting,
liking, commenting,
sharing.
sharing, yeah, exactly, all that, it helps. And we've seen a gradual increase in viewership and subscribers as well. So we thank you very much for your support. And we'll talk next week. Let's hope markets will do even better this week. And if the geopolitical situation stays relatively calm and positive hints come out of the White House and the Middle East, hopefully we can see even better performance on our portfolios.
I think everybody would be happy to see that.
Yeah, but less volatility, and the VIX seems to be indicating that. So let's see if it's right or not, and if the index is right or not, and we'll take it from there. We'll speak
Okay.
next week. And again, thank you very much for following us and for listening to us and the things we have to say. And feel free to ask us or to suggest what you want to hear from us, what you want us to talk about.
Yes, please do that. Have a wonderful rest of the day and start to the new week.
Have a great week, everybody.
Take care. Bye.